And can you guys see the screen okay?
Yes, ma'am.
All right, let me go ahead and let everybody in. All right, I think we've got everybody. Good afternoon, everyone, and thank you all for joining us for today's a month of service presentation of property taxes, protests, valuations, exemptions, and payment options. My name is Nia Murray. I am the programs coordinator with Neighborhood Recovery Community Development Corporation, and we are one of the partners in the A Month of Service collaboration. Also included, we have the City of Houston's Department of Neighborhoods, and on behalf of our presenting partners today with the Harris Central Appraisal District, we have Ms. Sarah Hatch and Mr. Frank Altamuro, who's going to be providing the information for you today. Also, on behalf of our presenting partner with the Harris County Tax Office, we have Ms. Shay Pinkowski, who's going to be giving the information about the tax payments and the payment options that are available to you all. But also included in the partnership, we have Texas Legal Services Center, the Harris County Attorney's Office, Lone Star Legal Aid, the Earl Carl Institute, Houston Volunteer Lawyers. Um, did I say Earl Carl Institute? I think I got everybody. If not, I do apologize. But the nine of us are, or a collaboration that make up a month of service. And basically, a month of service is the collaboration of all nine of our organizations coming together on a monthly basis and offering a variety of different workshops, resources, and information to communities that we all serve relative to asset building, asset protection, the maintaining of generational wealth, and community empowerment. We started this collaboration several years ago in an effort to create a larger impact and to get more information out to the various communities. We know that there are a lot of underserved communities that are out there who do not have access to a lot of information, don't know where to go for available resources. So we decided to collaborate and pool a lot of our initiatives together so that we can get as much information out as we possibly can, as much accurate and up-to-date information that is relative to the city of Houston, to Harris County, and to the state of Texas. So do know that wherever you're joining us from, that the information that we do present here today is relative to your area as well as, and also to processes and things for your particular area, regardless of where you are in Texas. So know that the information is still relevant to you as well. However, if you for more specific and detailed information or questions about your specific information, we do encourage you to reach out to either our legal service partners or to the presenters, taxing entities and jurisdictions for your area where you are for more specific questions and things like that. However, we do have some folks that are here. They're going to be monitoring the chat. And Sarah and Shay, we're going to be doing an introduction of those folks as well to you as well. But this is your opportunity to ask questions. It is the tax valuation notices have gone out. Lots of folks still don't know about or have questions about various exemptions, tax bills, are past due at this point. If you are experiencing some financial hardship and you have questions about your tax bills, and you want to make payment arrangements, this is your opportunity to ask those questions and to get those kinds of things addressed. I do want to remind everybody that we are on a public platform. We do record the sessions. We do broadcast live from our social media page on YouTube, and share it on our other social media sites as well. So we do want to try to protect your privacy as best as we possibly can. So we ask that you try to keep your questions to be as general in nature as you can and not divulge any personal detail or specific information about where you live, who you're married to, so on and so forth, because we don't want that information kind of getting out there for people to have access to. And if there is a specific question that you may have about your particular situation, please type a message into the chat. The folks that are monitoring the chat will be able to address you a little bit more specifically or tell you how to make contact with them to get a little bit more one-on-one. So again, we don't want that personal level of information kind of getting out there for everybody to have access to. So do keep that in mind. With that being said, there's going to be a lot of information that's going to be covered here today. We want to welcome you all and thank you all for joining us this afternoon. Again, feel free to come back, share this information with folks that may also find the information to be beneficial who didn't get the opportunity to join us today. We do, again, record the session. I do send out the link of the recording so that you all can go back and watch or share with other people. Any resources, websites, or anything like that that are made reference to, I do also forward along that information to all of you as well. What else? Am I forgetting anything else? If not, I'll fill it in at the end. Feel free to type your question again in the chat. If you are joining us on social media, I am monitoring that the social media sites as well. So feel free to type your question into the comment section, and I'll make sure that your question gets answered if it's not already addressed throughout the presentation, as well as those folks that emailed me in advance. I do have those questions, and I'll make sure that those questions get addressed again if they are not already answered throughout the presentation. So with that being said, we're going to go ahead and get started. We're kind of doing things a little bit out of order today. Typically, we'd have the appraisal district to go first, but we're going to have the tax office to go first since the majority of you are here for the protest and valuations and have more questions about that. So without further ado, Sarah, we are going to have you guys go ahead and introduce first, you and Frank and the folks in your office. Shay, we'll have you introduce yourselves last, and then you can move on into your presentation. So Sarah and Frank.
All right. Good afternoon. We appreciate the opportunity to be here and help give you all some information. Mr. Frank Altamiro is going to be presenting on some general information about the protest process and the deadline. And then I'll be giving some information about the exemptions. My name's Sarah Hatch. We're both with the residential department. And then we have Miss Anitra Collins here from residential to help answer some questions in the chat as well. And then we've got two representatives from the exemptions department here to answer questions for you in the chat also. That's going to be Miss Linda Lightco and Miss Kim Causey.
Okay.
Well, my name is Shay. I know my camera isn't on right now, but I apologize for that. It seems to be a technical issue that I have with my computer. My name is Shay Pinkowski, and I'm here with the Office of Annette Ramirez, the Harris County Tax Assessor Collector's Office. I'm super excited to be able to jump in and share some information with you folks and answer any questions that y'all might have. I will also have Miss Vicky Fatsura jumping on to assist with questions afterwards and in the chat. So she'll be answering questions.
Okay, go right ahead, Shay.
In the chat, although we're under the same meeting name. And hopefully everyone can see everything okay.
It's loading. Yep, you're good.
Beautiful. All right. So as I mentioned before, my name is Shay. I'm with the Harris County Tax Assessor Collector's Office. We are also your voter registrar. So if you're not already familiar with the process, we do conduct quite a few different things for the county, one of which is registering our voters in order for them to be able to vote during our elections. Another is the process of auto services, which includes vehicle registration renewals, title transfers, and ensuring that every vehicle that is on the road is registered and able to conduct their business. And then the one we're talking about today, which is, of course, collecting property taxes. So by the numbers, because Harris County is so large, we do have quite a bit of business going through in order to get all of the jurisdictions that require funds from taxes to get paid and dispersed. So just in numbers down here, we generate approximately $1.4 billion in revenue for auto services. So that's your title transfers, that's your vehicle registrations, that's, temporary placards, all of these things that we would normally assess taxes for and provide to the jurisdictions. It's $1.4 billion in auto services. Last year, we produced $8.5 billion in property tax revenue from this past 2025 tax year. And those all go to the jurisdictions that are collecting property taxes to ensure essential services. We also have collected $95 million in hotel occupancy taxes last year. We have served over 2 million property or 2 million residents of Harris County in our branch offices. And that's everyone. That's folks who are registering cars, registering themselves to vote, as well as paying property taxes. We see folks from all walks of life, and we help everyone that comes through so that we can get their processes taken care of. And of course, we also receive approximately 2.7 million registered voters who have come through and either renewed their voter registration or are registering for the first time, or are asking general questions about their voter registration. So we do see quite a few folks coming into our offices, and we're really excited to be able to help so many people and to serve our community like that. So just in general, the property tax life cycle goes something like this. The first step of which is the appraisal phase, which is when the Harris Central Appraisal District determines the value of your property, along with any exemptions that you might have. That's the first phase. That's when they get their initial information. The secondary phase is the equalization phase, which is when you, as the property owner, are able to go and protest your property taxes, or the property tax value rather, whether that is something that is incorrect or exemptions that you were not previously applicable for but now are. In order for that information to all be true and accurate, the equalization phase is super important, because that's how the appraisal district is made aware of all of the differences that are occurring in your account. So that's a very important phase, and mostly the one that we're going to be focusing on today. The following phase is the assessment phase. This is when the governing bodies, the jurisdictions that collect property taxes for Harris County, are determining what their rates are. They're determining what amount of money is necessary in order for them to maintain basic operations. And that's kind of how they determine how much what their percentage of a tax rate is. So all of that goes into the assessment phase. And then the final phase, which is when the Harris County Tax Office is most involved in, is the collection phase. This is when we're mailing out statements. This is when we're setting up payment agreements, accepting payments, and assisting our taxpayers in being able to complete what is necessary for their account. So that's that last and final phase. And then it starts all up again the following year. So this is a continuously revolving cycle that goes through the year. And that's something that's typically around November, June, when you start to get those tax bills. Calculating your tax bill is a bit of a calculation, and honest, because of the way that it is done, a lot of folks don't or are not aware of how the property taxes are calculated. So it all begins with the taxable value, which is the value of the property that is subject to taxation. That is not including any exemptions. So if you have a homestead over 65, disabled veterans or disabled persons exemptions on your property, that's not included in the taxable value. So we take the taxable value after exemptions are removed, and we multiply it by that tax rate that the governing body determines during their phase of that tax cycle to come up with the amount that you are taxed on. So that's where that whole process goes through, and how they determine how much you are getting taxed. And every jurisdiction both determines their own tax rate. So every single jurisdiction that you have on your taxes determine what their rates are separately. They all determine and have different requirements for their exemptions, and they're all calculated separately. But because the Harris County Tax Office collects for so many jurisdictions, we actually have quite a few listed on your tax bill for most folks. So if you're looking at your tax bill and you see this long list of Harris County Flood Control, Harris County Hospital, Harris County flood and Department of Education, along with a school, possibly a MUD. All of these jurisdictions are separate entities that we collect on behalf of. So whenever we receive the tax payments, then we disperse those payments to the jurisdictions appropriately. And that is how those jurisdictions get paid in order to continue their processes. So we've had quite a few different changes happening in the past couple of years, most of which have been good. They've added amounts to your school's general homestead exemptions. So folks who have just the homestead or homestead and over 65, disabled or disabled veterans, that exemption changed from 100,000 to 140,000 for your school. Also on your school for over 65 and disabled homestead owners, that exemption increased from 10,000 additional to 60,000 additional. We've also, as part of these past couple of cycles for elections, have expanded exemption qualifications for the surviving spouses of veterans whose death is service-related condition. So they've made it easier for those surviving spouses to qualify for those exemptions where they would not have previously. Along with temporary exemptions that are going into place now. This isn't even active currently, but in the future for a temporary exemption for improvement of a residence because it was destroyed by fire. And of course, business personal property exemptions have gone up to 125,000 for 2026. So there's a lot of changes going on. They're constantly changing. So it's always good to keep yourself informed and abreast of the situation and what is available and what is changing. So just visually, the difference between a property that has no exemptions and a property that has just a homestead versus a property that has homestead and over 65 or a homestead and a disabled or homestead and disabled veterans exemptions is pretty substantial. A lot of folks don't really recognize just how much all those exemptions add up to whenever we're calculating those bills. So for instance, on a property in Harris County that has the Harris HISD, which is Houston Independent School District, your city of Houston, Harris County, the Port Authority, flood control, the hospital, along with the Harris County Department of Education and a Houston Community College. That's what we're basing this information off of. But on a property of $400,000, without any exemptions, you're seeing something in the realm of $8,500. And that's just for property taxes for those jurisdictions listed below. Versus when you have the homestead exemption and you see that bit of savings, you're getting a tax bill closer to 5.5. And then, of course, with a homestead and an over 65, or a homestead and a disabled persons, or a homestead and a disabled veterans exemption, you're seeing closer to a little over $1,500. So the difference is pretty substantial just there in the information showing, but with a property value that's lower, say something along the realms of 250,000, you start your property taxes without any exemptions at about 5,000 or 5,300. With a homestead, it equates to about a little over $3,000. And then for our folks who have the over 65 and disabled persons exemption, it's reduced drastically to approximately $71.63. So you can really see how these savings add up when you have these exemptions available to your account and you're actually taking advantage of them. So it's super important that if you are eligible for these exemptions, that you're applying for them and making sure that you're not paying any more than is necessary. One of the options that we have and the available talking points of property taxes is when you are over the age of 65 and you have that exemption on your property, or you are a disabled person with a homestead or disabled person or a disabled veteran with a homestead, is something called a tax limitation. You'll hear it referred to as a tax freeze or a tax ceiling. There are quite a feet different names for it, but they all mean the same thing. Now, this is a calculation that's done in-house. You don't have to apply for this. But what a limitation does is it limits the amount of which you would pay your school taxes. So not all property taxes have a tax limitation, but your school does. So your school, for instance, the year you turn over 65 is the year that that tax ceiling amount is set. So if you were to turn 65, have your exemption placed onto your property that year, if you were to pay $500 for your school tax, just the school tax, the following year, even if the value of your property dictates that you would pay a greater amount than the $500, say the value of your property went up, the tax ceiling limitation would require us to only tax up to the year in which it was frozen. So we would only be able to tax up to that $500 from the first year. Now, say the opposite happens. Say the value of your property decreases, or they increase your exemptions again, or something happens to where the property is no longer the same value and it's getting reduced. Well, we would actually tax you on that lower value. We would only tax up to the value that it was originally frozen at. But we would tax you less than if that's what the calculation dictates. So it is something that happens automatically. A lot of folks give us calls saying, hey, the calculations aren't matching. This doesn't sound correct. You know, the math isn't mathing. And when that happens, we usually have to check to verify, oh, it's because you have a ceiling. This amount is, we are not able to tax you on any more than X amount of dollars for your school. And, you know, of course, that's excellent news. So everyone's really excited to hear it, but that's what happens. And a lot of folks aren't aware of it. So when they see it, they're just like, oh, no, they're taxing me wrong. I'm going to owe money. That's not the case. Another really great option that we have available to our residents here is something called a tax deferral. Now, tax deferrals are a postponement of taxes, and postponement of taxes mean that the property taxes are still owed. Those taxes are still required to be paid. However, when you have a tax deferral on your account, you are giving yourself the option of postponing your taxes, and instead of us collecting penalty and interest fees, we would only collect a 5% interest per year on unpaid balances, meaning that you can still continue to pay your taxes timely and go on as if there was no changes made. However, if the worst were to happen and you're not able to make your full payment of taxes at the end of January, or you unfortunately forget to pay your taxes, you forget what day it is, or you're not, say for instance, you're on vacation and it completely slips your mind that you have taxes to pay. Well, when you do so, the tax deferral is a great tool to help you pay at a reduced amount of interest. So that 5% interest per year equates to about 1.6% per month. So you really do see a very big difference between how much you would normally have to pay versus with the deferral, how much that protected amount is. Now, I do want to make this clear. A deferral is not an exemption, and an exemption is not a deferral. So if you have the over 65 exemption, you're not going to owe that money that is exempt back. That money is taken off, and you can see it like a discount almost, because it's exempt from taxation. So long as you are living in that property and you are over the age of 65 and all of this is applicable, then you do not pay on that exempt property. Now, the deferral, all the taxes that you see on your tax bill are due. Those are amounts that you are owing to the jurisdictions for paying for the services that everyone provides. But what this does is it helps protect you, and it acts almost as an insurance to help you reduce the possibility of having those penalty and interest fees, which we would no longer collect. And it helps you avoid litigation and prevent foreclosure on a property, even if you aren't able to pay your taxes off in full. So it's a really great tool. I do want to note that if you are currently under an escrow or you are paying towards your house, that you consult with your mortgage company before you go through the process of applying for this deferral, only because not all banks will allow you to have a deferral on your account when they have an active interest in the property. So just keep that in mind whenever you're going through this process, or if you decide that you'd like to pursue this. You can apply with this through the Harris Central Appraisal District, and make sure that you communicate this with your family as well, because any deferred taxes, say for instance, you set your deferral and your financial situation does not allow you to pay anything on your taxes. That is unfortunately the case for a lot of folks, but make sure that your heirs or whoever you're leaving this property to are aware that your taxes are deferred. So when you are no longer residing in that property, whether you move, whether you pass away, you want to make sure that your heirs are aware of this so that they are aware that there are taxes that are outstanding. When that deferral is removed from your account, you have 181 days in order to pay with that deferred amount. after which the Harris County Tax Office does collect for the full balance with penalty and interest as normally assessed. So just keep that in mind when you're going through and applying for these things. It is a really great tool, and I don't want to discredit or make anyone feel like it's not worth it, because honest to goodness, it is a very, very helpful tool, but it is something that you want to be aware of all the components before you go through with. So just wanted to touch on that a bit. Another option that we have for our over 65 disabled or disabled veterans homeowners who are living in their homestead is something called a quarterly payment plan. Now, quarterly payment plans are not like our installment agreement plans because quarterly payment plans do not assess penalty or interest. You would pay a quarter of your total levy, the first payment being due at the end of January, the second due at the end of March, the third due at the end of May, and the fourth due at the end of July. Now, there's no penalty or interest if you pay timely. And you can use this for unpaid taxes for that year. You do have to contact our office at the Harris County Tax Office in order to, it's not necessarily an application. It's more to let us know that you are interested in pursuing that quarterly payment plan, and we have to notate your account to show that you are going to be paying your taxes in quarterly. That way we can have that notation on and we can code it properly in order to get you your statements correctly. So do highly recommend. It is a great help for folks who are on a fixed income or are unable to pay the total of their taxes all at once at the end of January. It is a really great help. And a lot of these plans and all of these options that we have are especially for our over 65 disabled homeowners or disabled veterans, specifically because we are making efforts into avoiding a situation which may cause someone who fits any of these descriptions to lose their home. So we don't want that to happen. So we try to make it as simple and give as many different options available as possible in order for folks to make their tax payments in a way that does not, cause them as much of a heartache as it normally would. So aside from that, if you do not have a homestead, or you have a spare tract of land, or you have a rental property, or you have a homestead, but you don't have the over 65 exemptions or any other exemptions that may qualify you for other options, we do have something called delinquent payment plans, which you are able to make payments on your account. You can do this in either 12, 24, 36-month installments. Now, these do come with penalty and interest. We are still required to collect those. But what this does is if you are able to set up this agreement timely before attorney's fees or collections get assessed to the property, it helps you avoid a 20% collection fee that normally would occur during July. It also helps you avoid foreclosure because it shows the attorneys and the banks that your property is still being paid onto. You are making an agreement with the county that you are to be making these payments. And you can make these agreements on our website. You can call our offices and we can assist you over the phone. Or if you'd prefer to come into a branch office, if you're close by, you're welcome to come into one of our branch offices and request for a payment agreement. And this is available for previous tax years. Now, I will let everyone know that in previous years, we were able to create an agreement, and then even if that previous agreement was not paid off, we would at that point have been able to extend it. Unfortunately, that is no longer the case. In order to create a new payment agreement, previous agreements do have to be paid off in full. So just keep that in mind whenever you're making your plans for paying these property taxes off, that you are also going to be owing for the property tax year that is consequent afterwards, that would be due at the end of January. So just keep that in mind. With this new website that we've actually started this year, we've been able to do a lot more to help our residents than we have previously, including setting up date reminders through your portal. So if you create an account through our portal, you can set up date reminders and it'll email you regularly or however often you set it up for. You can make your payments securely with saved information. So once you have your payment information saved into your account, you can save it and refer back to it to make payments afterwards, which is very, very helpful for our folks who pay with an account number or with a card because it assists you in not having to continually reference and possibly make a typo. In addition to always having your receipts available that are made through that website, you will have access to those on your portal as well. Super convenient, very helpful. And in addition to all of the normal type of processes that you are able to accomplish on our website, it also gives you the options to create your delinquent payment plan, monthly withdrawals through your bank, or a prepayment plan, which is something brand new that we have never been able to do before. But prepayment plans essentially allow you to pay. So if you're paid up in your taxes and you've already paid 2025, but you know 2026 taxes are becoming due here at the end of next January, you're able to set up prepayment plans, which allow you to make payments in advance without any interest, no penalty, no costs, no fees. And essentially what it does is you are taking however many months are between when you originally create your prepayment plan and your October month, which is right before we start to bill for the next year. And it splits the previous tax year's amount into those number of months to provide you with time and an amount of how much you would pay monthly in order to pay off the previous year's balance this year. Now, as everyone knows, your tax bill changes every year. It's pretty rare for someone to get the exact same amount due every year. And because of that, whatever balance is owed after that October is what would be owed on your statement. So whenever you get your bills in January or November rather, you'll see all the payments that you had made previously for your prepayments, and then whatever balance is due afterwards is the difference. So super handy, very helpful, highly recommend just because it does make folks, it makes it easier for folks to plan ahead of time how to ensure that their taxes are being paid, and it allows you to have more time in which to do so instead of paying one big lump sum at the end of January. We have quite a few payment options available. So aside from the website, which is very helpful in itself, you can also make your payments through the mail. You can always mail in a check or a money order. You can make a phone call to our office and, well, rather not to our office, to our automated phone system. And that automated phone system can take payments with card. Or if you'd prefer to come in person, you can pay with card, cash, check, and be able to receive assistance and an immediate receipt whenever you come into our office. Just a brief note, for credit cards or debit cards, there is a 2.4% fee that we are required to charge. There is no fee for using a check. There is no fee for using cash. And there is a 50-cent fee for each check. And of course, if you have the ability to pay prior to the end of the month, that is always my recommendation, only because when you pay prior to the end of the month, you are allowing yourself the ability to go in without the stress of knowing that you have to pay it that same day. And it helps avoid the lines because typically our volume is much higher during the end of the month. So just be aware of that. If you're paying online, that's not typically an issue. Our office is dedicated to helping you reduce your tax burden. Now, while we do not have any control over how much taxes we collect, we are always looking for new ways in which we can set up your payment agreements and make it easier for you to do so. We're now starting those prepayments. That's a really big help for folks who would rather prepay than pay late. And of course, our e-bills, which allows you to receive your statements in an email, as well as workshops like these, where you'll hear us where you'll hear us either virtually or in person speak in reference to property taxes, what's available to you, and help answer questions that you might have. But our office is dedicated to making this happen and assisting you in making your tax payments in the least painful way possible. We're here to help. So if you have any questions or you're unsure of something, please feel free to reach out to our office. Our phone number is here listed as well as our email address. There's a QR code here, so if you'd like to take a snapshot of that so that you can share this with your friends, and we post updates and our information as things change. You can also reference our website. Our website has a frequently asked questions section as well, and that seems to be a lot of help for folks also. I am going to hand it off to our folks at the appraisal district. I do see some questions on here, but I'm going to go ahead and disconnect my share so that HCAT can go ahead and get started.
Okay. Thank you very much, Shay. Sarah, I believe you and Frank are up next.
Yes, ma'am. Frank is going to kick us off.
Okay.
Yes, give me just a second. Let me share again. Okay.
Okay, and then to answer the question for the person,
Yeah, I was about to.
the recording will be made available for those folks that that have registered or that are on the call today. Uh, kind of going back through. What were you going to say, Shay? I'm sorry.
No, I'm sorry. I thought you were going to say if you wanted me to answer some of the questions that are in the chat before I come off of the microphone.
Are you leaving or and Ms. Vicky's coming in or
Yes, I'm handing it over to Miss Vicky. Yes, ma'am.
okay. Then if you guys don't mind really quick, because since I know Shay has to go, if we can get her to answer these questions really quick, as it relates to tax bills. If it's anything related to tax bill or removing exemptions, that those are HCAT questions. I don't see a question about actual tax bills or anything like that.
Okay. Alrighty, that's perfectly
Okay.
fine then. In that case, I'll hand it over to Miss Vicky to help in the chat. But
Okay.
thank you so much for your patience, everyone. And if you have any questions, please feel free to type it in. We'll be able to help you there.
Thank you very much.
Thank you.
All right, Frank, you're up.
All right. Thank you. Welcome. Can y'all see my screen? Just want to make sure.
Yep, you're good.
All right. Perfect. So we are the Harris County Appraisal District, Central Appraisal District. We did change our name from Harris County Appraisal District a few years back, just to basically show that we are a Texas-based organization, not actually a county-based organization. So that's the reason. We're still HCAD, though, for this purpose. So basically, what do we do? Our job is to support the local services. Texas has no state income tax, so we are a local taxing unit, use the taxing revenue to provide local services for schools, streets, roads, police, fire protection, etc. And we do serve over 600 taxing entities in Harris County. So our role as the appraisal district, our values, we appraise all the county properties, residential, commercial, agricultural, industrial, and business personal property at 100% of market value, and that is as of January 1st of each year. We do administer exemptions. We certify the appraisal rolls, which allows the taxing jurisdictions to set their rates accordingly. We keep the system fair, and we are overseen by our chief appraiser and 7 members of our administrative board, 3 of which now are elected officials from the county. We are required as part of our role in the tax code to be at 100% of market value. We are overseen by the state that conducts biannual property value studies of each CAD to ensure compliance. These are conducted by all these appraisals are done by Mass Appraisal in Harris County. Value is based on sales that we find in this area. And we also are responsible for 1.9 million parcels, and serving over 500 taxing jurisdictions in Harris County. So many of you have received your annual value notice from us. You should have received that soon. If you have not received it, it could be you have a hold on your account for some reason, and you may receive it later. There are two things that are on each value notice. One is the appraised value. This is the number used in calculating your tax bill. It may be the same as your market value, but it may also be lower because of your 10% cap for your properties with the homestead exemptions. The market value of the property is the value at which a property would sell for a willing buyer on the open market. And our protests that we have are based on market value of the property. Notice here the I-file number. Those are important, and I'll get to that in just a second here. So looking at it, you do have that unique I-file number for your account. That is necessary for you to file your protest if you're doing so online. You can conveniently file a protest online at www.hcad.org/ifile. And again, the protests are based on market value of the property. And the protest deadline for this year is coming up. I believe it's next Friday, the 15th of May. So the back side of your value notice contains some helpful information such as the land and value improvements, previous year appraised value, your specific taxing jurisdictions, and your current exemptions that may apply. So what determines your property value? So we have 7,000 neighborhoods within Harris County alone. Those sales that happen in those areas do help determine your market value. So one of the things that can be talked about in a protest hearing is the condition of the property. Does that affect that will affect your market value. And some of the amenities that are available. Do you have a pool that's an extra feature on the property? Maybe you have some solar panels on your roof that provide power to your property. There are exemptions, and that'll be talked about later for that. So everyone has the right to protest or appeal. So what to consider when you're protesting the property? Well, is your value consistent with recent property sales in your area as part of the market value? Equity. Are similar homes in your neighborhood valued more or less the same? Do you have the same issue? Do you have issues such as deferred maintenance, hidden defects that may affect your home value? Do you have some repair estimates? Do you have some comparable sales information? Maybe Texas is a non-disclosure state, so maybe we don't have some of the sales in your neighborhood. Some hidden defects. Photos are always good to bring in. So there are different types of ways to protest. You can fill out and mail in or submit electronically the paper form. You can go online and iFile. You also have the opportunity to opt into iSettle if you file online. This is in lieu this takes the place of your informal hearing. Informal hearings can now be done virtually or in person. You don't always have to come to the office to conduct your hearing, as well as your formal hearings can be done virtually as well through our WebEx program. They can also be done in person, and you have the choice of a 3-member panel or a single-member panel now. And beyond that, there's also an additional method, which is arbitration. So some of the evidence that's reviewed. Once you filed your protest, HCAD evidence is provided to you, the property owner, at least 14 days prior to your scheduled hearing. Take note of the sales in your immediate neighborhood. Also, the sales surrounding your neighborhood can affect your value. Interactive maps are put that have nearby sales, and those can be taken into perspective. Also, additional points of property information data. Is there an external obsolescence? Are you next to a business? Are you close by a school or a property maybe of church use or something like that? Those sometimes can be taken into consideration. And state law does only allow us to divulge the sale information once you've filed this protest. We used to be able to, a long time ago, to actually see the sales before you protest. Now you have to protest in order to see those. So some tips for preparing for your protest. And again, those protests are based on market value. So review your assessment. Take a look at your market value and your appraised value. Definitely look at your market value of the property. Gather comps in your area. Maybe maybe some of those comps are missing, that we may be missing some sales comps. If you know a realtor or somebody, you can reach out to them. Maybe they can give you some sale information for your neighborhood. You can document property issues, such as maybe there's an issue with some cracks inside your home or something like that. You can take any information. If you possibly had a repair since our appraisal date of January 1st, that was present as of January 1st, you could bring that estimate or the amount you paid for that in, and we could take that into consideration as part of your value. Be sure that you filed on time. There are many times property owners come in and they haven't protested their account, and unfortunately, after the deadline for it, unless you were noticed late, we unfortunately can't have a hearing for that. We do have one-on-one informal hearings with our appraiser and the property owner or agent if an agent is hired. And finally, 1-year ARB hearing. ARB stands for the Appraisal Review Board. Maybe you had to go to a hearing beyond the informal process, and you brought the information in that you needed to reduce your value. So a little bit about formal hearings. They are limited, so come prepared. Organize your evidence in the same order as the main points you want to make available to them. Bring copies of evidence, not only for the 3 panels members or the 1-member panel, whichever you choose, also for the appraiser and yourself, so that when you're presenting, you can present that information to them. And our hearings usually do last about 15 minutes. So just to give you a little idea of our calendar, again, January 1st is the date of appraisal. Your value is based on the condition of your property as of that date. May 15th is the protest deadline for this year, which is a week from this Friday. So if you haven't filed, protests must be filed by the state for any change of value to occur before values are provided to the jurisdictions and taxing bills are calculated, unless you were noticed late. If you were noticed late, you have 30 days from the date of that notice to also protest, whichever comes later. Okay. And again, October and November, tax bills are mailed out. These are usually done by the Harris County taxing units, handle the local tax assessors. We do not accept tax bills at payments at HCAT. And finally, the delinquent date is February 1st of the following year. So now I'm going to turn it over to Sarah Hatch, and she's going to talk to you a little bit about exemptions.
Okay, good afternoon again. So I'm going to talk about exemptions. What are exemptions? They are benefits that you can have on your property that exclude part of your property from taxation, is the long and short of it. So we have several different exemptions that can be applied to your property. The most common residential exemptions are the general residence homestead, the over 65 exemption, the disability exemption, the over 55 surviving spouse, the disabled veterans, and then other service-related exemptions. I'm going to talk a little bit more about some of those. So the most common is the general residence homestead exemption. Anybody can apply for this as long as you own and occupy the home as your primary residence. So you can have this on one property that is your primary residence. There is documentation required for this exemption. You need to have proof of ownership of that property and a driver's license or a state issued ID with that address as your primary residence listed on there. What this exemption does is it provides a 10% appraisal increase cap. That means that your appraised value, or the value that you that your taxes are based on from one year, can't increase more than 10% the next year. It also provides a $140,000 school tax exemption by state law. So that amount of the value will be taken off of your taxable value. Other exemptions may be offered by various jurisdictions related to the homestead. The city, the county, or other special districts may offer additional exemptions for this, depending on where you live. Next, the over 65 and disability exemptions. The over 65 exemption you qualify for the entire year that you turn 65. So if you're turning 65 later this year, you qualify for that exemption for this entire tax year. The disability exemption, you qualify for this the entire year that you become eligible to receive disability benefits under the federal old age survivors and disability insurance. This does require a physician's statement to confirm, but again, the entire year that you become eligible for that, the exemption qualifies. So the benefits for either of these exemptions are the same. There's an additional $60,000 of exemption for school taxes, and the school taxes are limited or frozen. So in addition to the $140,000 that comes off of the taxable value for the homestead, there's also the $60,000 for the over 65 or the disability. These exemptions are granted to homeowners with a general residence homestead. So this would be on the same property, the same primary residence that you have the homestead exemption on. You're eligible for tax deferral and to pay taxes in installments without penalties. And then other exemptions may be granted by individual jurisdictions, just like the homestead. Special payment options are also offered by the tax assessor collector for these exemptions. All right, some of our other more common ones, the over 55 surviving spouse exemption. You qualify for this exemption if your deceased spouse died in a year in which they qualified for the over 65 or the disability exemption. So if your spouse is over 65 or has the disability exemption and they've qualified for that exemption and they have passed away and you are at least 55 years of age or older on the date of their death, then you are eligible for this. And then you receive all the same benefits as the over 65 exemption. The veterans exemptions, a total veteran exemption or surviving spouse. There are also partially disabled veterans exemptions. There's surviving spouse of veteran or first responder who is killed in the line of duty, and a partially disabled veteran with donated residence or surviving spouse. We also have the immediate residence homestead exemption. So this is the homestead exemption that you qualify for upon occupying the home. This is particularly relevant for new built homes or homes where the previous owner had no exemptions. So typically your full homestead exemption applies after the first full year you occupy the home, but now with the immediate residence homestead exemption, if you started occupying a new home or a home that had no exemptions on it partway through the year, you can apply for the immediate exemption. So you must apply before the first anniversary of the date the property was acquired. So if you buy a home today, you need to apply for the immediate homestead exemption before May 6th of next year. If the previous owner did not have exemptions or the home was never occupied before, the exemption will be granted as follows. So for the first year, you'll have a prorated exemption for the portion of the year that you occupy the home. For the second year, you will receive the full exemption, and that will establish the cap eligibility base year. So that'll be the first full year you occupy the home, and after that year, you will receive the 10% limitation on the increase of the appraised value. If the home was previously owned and was receiving exemptions, then the previous owner's exemptions will remain for the remainder of the applicable tax year. All right, so we also have an heirship exemption. The steps for receiving the homestead exemption, if the ownership is shared by multiple heirs, is what we're talking about here. So on section 3 of our general residence homestead application, we kind of have a sample of it there in the slide, where you have the highlighted portions. Those are the important questions for if this is an heirship property. So the questions are, is the property for which this application is submitted an heir property? And then do other heir property owners occupy the property? So this will tell us if this is an inherited property, and then if there are multiple heirs and multiple occupants. So the information that is needed with this application are an affidavit establishing ownership of interest in the property. This can be an heirship affidavit or a form 50-114-A. Also a death certificate for the prior owner of the property, as well as a copy of the property's most recent utility bill, and a citation of any court record relating to the applicant's ownership of the property if available. So how to apply? We have a really helpful new tool that we call the Exemption Wizard. The Exemption Wizard can help you determine if you're eligible for exemptions, and if so, which ones. So you can go to www.hcad.org to find out, and use that tool to help you determine which exemptions you may be eligible for. Once you've done that, we have multiple ways that you can file for your exemptions. We have paper forms that you can mail in. You can file online. You can apply in the mobile app or via email. So depending on when your application is submitted, the processing time may take longer. It's important to submit everything at once to avoid delay in processing. So for example, if you're applying for the general residence homestead and that requires a driver's license with your with the address on it, go ahead and submit the application as well as a copy of your driver's license all at the same time, and that will help avoid us having to reach back out to receive that that paperwork and delaying the process. Once you've applied, once it's applied to your account, you will be notified. And a how-to video for completing your application is available on our website at hcad.org. And then under the forms on the top banner, and then under popular forms. We also mail out annual exemptions confirmation cards. These are typically mailed in December to anybody who has an existing exemption on a property. So this is an example of what it'll look like. It's kind of like a postcard. It will show the tax year, the account number, and the property location. It will also show which types of exemptions are currently active on the property. And then on the back, it will have a statement about if you've received these exemptions, if you still own the home and your qualifications haven't changed, then these will automatically be renewed. You don't have to reapply every year. So if nothing has changed, you will still automatically have that renewed for the next year. Or if there have been any changes, if you or your spouse have turned 65 or become disabled or qualify for any of those other exemptions, then you will need to reapply for those. If you became eligible for those for the first time, and if you believe you qualify for other exemptions that aren't shown on the front of the card, please contact us. Also, if you no longer are eligible for any of these, then please contact us for that as well. And then we have multiple ways that you can contact us with any questions and or to file applications for exemptions. Our address is 13013 Northwest Freeway, Houston, Texas 77040. The general phone number that you can call and speak with one of our representatives is 713-957-7800. Our website, again, is www.hcad.org. There are maps there, forms, property search, instructive videos, remote hearing instructions, workshops and events, lots of helpful information on our website. And then you can also go onto our website and fill out a contact us form, which would be at hcad.org/contact-us-form. And that's all I have.
Okay. Now couldn't figure out how to get my thing shot. There have been quite a few questions in the chat here. And I know your team has been great about answering some of these questions. Some of them I'm going to go over again because I know not everybody has access to the chat or pays attention to it. So they may have some of the same questions, and as well as some of the questions that were sent to me in advance. So I'm going to go over those. Majority of the questions here are about multiple exemptions on multiple properties or exemptions available for other properties. Can you file more than one exemption on more than one property?
You can only have a residence homestead on one primary residence. I believe there was another answer to that question in there.
I saw the one about the person with a disabled exemption.
See, it says if you are a disabled veteran, you can apply for an exemption on a property you own and do not occupy on one property in Texas. Maybe one of our exemptions specialists can confirm if that's an additional property to the homestead. Or if that's...
So is that Miss Linda or who's that?
Miss Linda or Miss Kim?
Can one of you all come off mute and confirm
I think
the reading-
Linda.
I can't. Sorry, I was responding back on one of them and I missed the question. What was the question?
About the property tax exemptions for veterans. Is that for one
About
additional property, or is it only one property that they can have an exemption that they don't own and occupy?
So for the disabled veteran exemption, they can only have that on one property. But that one is different than the residential or over 65 or disabled disability exemption, because you can request that exemption on a property anywhere in Texas that you own and not occupy. Does that help?
Is that only one property, or is it
Only one.
Only one.
Only
Okay.
one. Mm-hmm.
Okay. All right. So that does, I wasn't aware of that. Let's see. There was a question for the new law. How does that help reduce? And could you provide an example? I'm not sure believe that was during Shay's presentation. Ms. Vicky, are you there, Shay? Or how do you request to transfer an exemption?
Was that for are you talking about the one with the disability where they were asking?
No, just in general. So if you move, or if you're having to, move from one location to another, how do you transfer an exemption?
So on the application for, say, the new property, there is a place on the application where you list your previous residence, the address, and we check those addresses and we will remove those exemptions. Also, we have the removal form, which is online under the forms and then exemption forms, and it's called the exemptions removal form, and they can complete that as well and submit that. It can be done electronically.
Okay, so I see that question. Okay, another question here. It says, I'm an heir to a property with 3 other siblings who pay nothing towards the taxes. The property is vacant with no exemptions. I live in my over 65 exemption. So can I claim both properties? So we already answered that one. Or are there any other reductions or anything that can help relieve tax burdens for people that own multiple properties?
The only thing for that would be the disabled veteran exemption, like we had spoke of a little bit earlier, but that property cannot be in the estate of. It would have to have already gone through probate and everything, and it be in the heirs' names, and then they can apply for their percentage of the disabled veteran, if that would be the case for them.
Okay. For the sake of protesting, estimates have to be dated from what date, or when do they have to be based upon?
Estimates should be
for repairs.
Estimates for repairs. Everything that's an estimate for repairs should be after January 1st for those. If the repairs have taken place. If they've not taken place and they just had an estimate of repairs and they didn't have the repairs actually done, it can be in the previous year, but it shouldn't be older than that because it won't have accurate pricing on it.
Okay. Okay. Keep getting the same question about multiple exemptions. Let's go to another one. Tax
I do want to just reiterate on that question about repair estimates. Our value is as of January 1st. of this year. So your 2026 value is based on the condition of your home as of January 1st. So what we're trying to do is determine the condition of your property on that date. So if you have repairs that occurred after January 1st, that's why we're saying afterwards, repairs done afterwards helps us know what the condition was on January 1st. So as close to that date or after that date is best for helping us determine that.
Okay. As a homeowner preparing for my own protest case, how should I adjust comparable property values up or down for differences? Or is there like a standard formula that you all use when there's a difference, or when you're trying to compare your home to like your neighbor's home or what have you?
So for our purposes in our evidence, we're appraising en masse. We're valuing an entire neighborhood of properties together. We're trying to do so in a way that is fair and equitable for everybody. And so we do apply the same calculations to all those properties. And so we are going to adjust differences in those properties in a consistent way. Does that kind of answer the question?
No, so when somebody's preparing their own protests and they're looking at other sales in their own area, they're doing their own research, and they see that, this house added a third bedroom versus my house, or fourth bedroom compared to my house that only has, what numbers, or how do you value that adjustment? Or is there like a formula that's used that, like the average person would know, this house sold for 300,000 and it has an extra bedroom, but mine doesn't have that extra bedroom. And then they did upgrades and updates and put whatever else in their kitchen and did this, and mine did not get those updates. But the houses were built at the same time, same neighborhood, same subdivision, everything else is the same. How do you make an adjustment for what you think your value should be when you're going through the protest process?
Typically, it depends on if it's like a tract neighborhood. Most of those homes might have the same grades and stuff that we look at, so it wouldn't require much adjustment other than possibly the square footage or land difference in those values. Now, if it's an adjustment for condition, we do have what we call a condition desirability utility that we can adjust for that. And those have different scales based on the years of percent good on those properties.
Okay. Oh wow. Okay. This is a little personal, but I'm gonna try to clean it up as best I can. What happens if a spouse abandoned a homestead that was more than 10 years behind on property taxes, which is now the current homestead? How did they get caught up on the taxes that were behind? Or what's the option?
I believe
That
that's
would be
probably a
that would be a
tax
Shay. Yeah, tax office question,
office
Shay
question.
or
Yeah.
Vicky.
I mean, as far as the exemption, they could apply for the exemption with us for a new exemption. But as far as the payment and that would be something the tax office would take care of.
Okay. We'll wait to see if Vicky chimes in on that one. The next one. I recently read in Houston Chronicle about a tax tool that could help with protests for a fee, of course. If I understand it correctly, it provides additional and more accurate comps for the homeowners that help to determine the appraised value when doing the protest and the hearings. Are these feasible to use versus the ones that are given by HCAD? And she put a copy or like a screenshot of the yeah.
Okay, so I'm not familiar with this specific tool, like I said in the comments, and I don't know what information it provides or whether it has access to more sales information than HCAD would. We do have most sales, most arm's length transactions that occur in the neighborhoods, we tend to have in our records. In order to access that, this is kind of an answer to another question as well. If you're wanting to know what sales we do have record of, you have to file a protest. Due to confidentiality, we're not able to give out that sales information except within the context of a hearing on your property. So if you file a protest, then you have access to our evidence pack, which includes a list of all of the sales that occurred in your neighborhood during the last couple of years. If I don't know if these tools have other information than that, but our priority for finding a good comparable for your property for the purposes of valuation is first, we're trying to look at what's within your immediate neighborhood. Now, we determine neighborhoods based on not only geography, not only where it is, and trying to keep it close to you, but also comparability. So we're trying to group like properties together that are within the same area and that have similar characteristics. So we try to look at the sales that occurred just within that neighborhood, if there are any. If there are not sales in your immediate neighborhood, then we'll look at other neighborhoods that we've grouped with yours that are also comparable properties and also nearby. And we're also trying to look at what are the most similar properties in the neighborhood to you. So we're not trying to compare your home to one that looks very different than yours if we have sales of properties that look more like yours. So, and I appreciate Ms. Nia's comment there also that we would caution against anybody that's wanting to charge a fee or ask for a fee online to do these kinds of things. Please do be careful and do your due diligence when it comes to looking at these kind of tools. That goes also for applying for an exemption. It is never going to cost you money to apply for an exemption. We have multiple ways you can do that for free. Please don't ever let anybody tell you, hey, we'll charge you $25 and file your exemption for you, or to file a protest. That is also free.
Yeah, and I know that some people just they don't even like being bothered with protests, and they'd rather hire a consultant to do it. I understand that. I still advise you to use whatever caution that it is that you need. Do your homework, compare the different companies and things like that. If they're local, they're not local. If it's some fly-by-night kind of company that you've never heard of that's online, out of state, somewhere else, I'd highly caution against something like that. Just be careful and do your homework when it comes to hiring those kinds of companies that you know nothing about.
And absolutely, you can hire a representative, but just the process of filing a protest is free.
Yeah.
Just filing it and saying I want to protest my value is free.
Yeah.
And then if you want to hire somebody beyond that, that's a different story.
Yeah, and then too, sometimes the cost that's involved with the savings that you actually get, it may not even outweigh you doing it yourself versus you paying somebody to do that, because the difference in the savings, they could end up charging you more than what you would have been saving had you filed your own protest yourself. So, just again, proceed with caution. Let's see, the HCAT website has an exemption deadline of that 30th of April. Is this a deadline applicable for those whose 1-year anniversary to purchase the date is April 2nd, 2025?
For that one, yes, for April 2nd, 2025, for the immediate residential homestead, the deadline has passed. However, they can apply for their general residence homestead for 2026.
Okay. So I'm a little bit confused there, because I thought that you can get the tax exemption for the current year regardless when you buy your home, as long as there's not an existing exemption on it already.
That is true. However, there is a deadline for the immediate residence homestead. That one is 1 year from the purchase date. The
Okay.
general residence homestead exemption, that is 2 years.
Okay.
Yeah, if you've had your primary residence for multiple years and are just now realizing you're eligible for a residence homestead exemption and you apply for it this year, you can get it going back 2 years.
And even though you missed the deadline, that doesn't mean that the previous owner's exemptions were not there for 2025. So you may have benefited in 2025 from the previous owners if they were there.
Because you prorated the taxes at the sale, or the cost of, or factored in the cost of the taxes at the sale.
No, because those exemptions from when the property is sold and the previous owner has exemptions in place, those exemptions remain in place for the entire year. The homestead, they don't come off. They're not prorated off. They stay for the year. So the new owner will benefit from those exemptions. Now, if you are over 65 or disabled, there is not a deadline for that. You can go ahead and apply for 2025. And of course, if you have it on your previous residence, then we'll take those off on the previous residence in order to apply for the new property.
Okay. Right. Let's see. How do you obtain neighborhood sale price information?
If you want to know what HCAD has on file for neighborhood sale price information, then you'll need to file a protest. Like I said, for confidentiality laws, you have to file in order to obtain our evidence that has that information. Or if you know a realtor who has access to that information, you can talk with them about obtaining that information. That's another way to do that. But to get what we have on file, you have to file a protest.
So if someone did repairs on their home in February 2026, as long as the damage happened in 2025, can they use that as part of their protest?
Right. So if
any repair that happens after January 1st can be taken into consideration for the January 1st evaluation, because it was present at the time of the appraisal date.
Yeah, assuming that it was present on January 1st. If you had, some kind of an event that occurred after January 1st, like a fire in your home or some other kind of natural disaster that occurred later than that, then unfortunately we won't be able to consider that. But if the damage was present on January 1st, then yes, that's relevant for your 2026 value and protest.
Okay. Looks like somebody was having an issue with the iFiling or on the iFiling site.
Yeah, I was actually gonna share my screen real quick if that's okay.
Okay, go ahead.
Just because it's easier for me at least to visualize these things, so. Let's see, can you all see that?
It's loading
Is
still.
it our website?
Okay, go ahead.
Okay, is that our website?
Yes.
Okay. All right, so this is what our website looks like. If you go to www.hcad.org, you see up on this top banner here, we have lots of different links that are helpful. This is where you can find forms. And then online services is where you'll find that iFile protest option. So if you then go down here to the iFile protest and click on that, you should be taken to a page that looks like this. And then, are you a property owner? If you're trying to file on your home, then you click this link that says HCAD Electronic Filing and Notice System. And that should open up another window for you here to go through our iFile system. If you've never signed up for this portal before, then sign up, and you can do that here. Or if you have already, this is where you can put in your username and password. This is where you can use that iFile number on your notice to file a protest. This is also where you can access your evidence through this portal once it's been made available.
Okay. So Ms. Sierra, I hope that helps. Dubai occupies a home. Okay, we went over that part already. And I'm kind of going through or kind of trying to scroll through some questions that we haven't answered or asked already, so that I'm not repeating the same question. Exemption deadline is for the 30th. Okay, we already did that one already.
Nia, I think we still have confusion about the repair question from February. Let
Okay,
me see
go
if I
ahead.
can clarify this. Your value this year for 2026 is based on the condition of your home on January 1st of 2026. If you had repairs done in February, I assume that means that in January, the damage was there. You had damage to your home that needed repairs on January 1st. You got it repaired in February. So for your 2026 value, that is relevant information. For your 2026 protest, bring those repair estimates, and that will be helpful information for us knowing the condition of your home on January 1st. For 2027, that'll be after those repairs were already done this February. If the repairs get done, then as of January 1st next year, your home will be back in, average or better condition. So for next year, that will not be relevant because the repairs will be done. For this year, absolutely bring those estimates and photos if you have them of what the damage was. Does that help? I hope.
You give us a thumbs up or tell us okay or something. Okay. Yes,
Excellent.
helpful tremendously.
Good.
Okay. All right. Back to the iFiling service. It says under the filing service, the link is not blue or clickable. Does this mean you're logged into that portal already, or is it the screen that Sarah showed you? Okay, she's logged in already.
Okay,
Yes, I didn't know
and
if I
her
could talk. So I'm logged into okay, good. I'm logged in. I was doing this actually yesterday. That's why I signed up for the workshop because I just clicked on it. I couldn't figure out how to actually access it. You see, it's not blue, it's not clickable. Where
to
would I
file,
go?
have you received your notice of value this year?
Yes, that's how I got the
Okay.
iFile number.
And you have not already filed a protest?
No, never have him ever.
And you don't already have a representative?
No.
Okay.
I'd say contact HCAD's office
Yeah.
offline for them to look into it for you because
Yeah, because I can't ask you for your
otherwise
account
it would have
number
been
here, so.
yeah.
Okay.
Yeah,
All right.
it'd be best if you called the main line that we showed earlier.
Okay.
They can actually look at your account and we can actually, even if we're unable to do an online protest, you can actually fill out a form for it on our website, and you can either mail that in or bring it by our office and drop it off.
Okay. All right.
Okay.
Thank you.
Yeah.
And what's that main number again, Frank?
It's 713-957-7800.
That's HCAD.
And I'll put that in the chat.
Oh, I just did. Okay.
Okay. Perfect.
713-957-7800.
Yes. Yeah, that's
Okay.
our main telephone line.
Okay. Then fixed income. Okay. I believe we pretty much answered all of the questions.
I was, if I can, I was speaking to someone in a private chat. I did have something that's a little bit more sensitive. Will they stay on? This is Shaya Lee, I guess.
Oh, Shay at the tax office.
Yeah, she reached
Shay
out personally.
Shay did have to leave, and I know Vicky Fatsora from the tax office was supposed to be kind of taking over and monitoring the chat. Let me see if I can get you the main number for the tax office for you to call them to get more. Let me see if I can look it up because I don't remember their number off the top of my head here. Do either of you guys have the number by chance? Harris County.
I can look it up real quick if you want.
Harris County Tax office.
Oh, she
Oh,
just answered. She got back on. Just, I guess she must have heard me.
okay. I'm gonna give the number anyway. The main office, 713, it's 274-8000 is the main number for the Harris County Tax Assessor Collector's Office. And I'm gonna put that in the chat too. Um, Harris County Tax Office. Okay, so I just included their number. Oh, thank you, Kim. We did it at the same time. All right. Are there any other questions for any of the other participants? Again, now is the time for you to ask whatever other questions that you may have about exemptions and payment options and protests and the deadlines that are coming up, which is actually next week. Were there any of those mailings that were sent after May 15th or after April the 15th? Because I know it's either May 15th or 30 days from the date of the notice. So if anybody's notice went out after April the 15th, then it's 30 days from that date, correct?
That's right, whichever one
Yes.
is later. So if for some
Yes.
reason your account was on hold and was later than April 15th getting noticed, whatever the date is on your notice, that's 30 days after that if that's later than April 15th.
Let's see. Will a disabled veteran be able to receive prorated reduction in current property taxes on current taxes on a property purchase? Also, if the vet is 100% disabled, therefore provides qualifying documentation, will that also be prorated based on the date of the closing?
So for a 100% veteran, yes, you can apply upon closing, but it's prorated on based on when you begin occupying.
Occupying.
Correct.
So would they, that means that they would have to get utility bills, or does the closing statement or anything like that actually account for it, or what would they have to produce?
We would need a warranty deed.
Okay.
The warranty deed, a copy of your VA letter stating your effective date and your rating.
Okay. I hope that helps. Let's see. Need confirmation also. Okay, I just answered that last question. So, I hope that helps. Okay. All right. All right, Sarah just got logged off by accident. So,
Can I add something? I'm sorry, real quick
yes, ma'am.
on
Yes,
the
go right ahead.
veteran. So the 100% veteran is different from, there's two types of veteran exemptions. If you are 100%, you would apply, and that one is prorated on. If you are less than 100%, that exemption you would not be eligible for until the following year, because you would have to own that property as of January 1. It's the same thing as far as the effective date. Say your effective date is December 1st, 2021, and you're at 80%. You would not be eligible for that percentage exemption until 2026. The total exemption, where it's 100%, is the only exemption to where you can apply and be eligible in the year in which you purchase and occupy and are 100%. You may purchase the property, say April, and then later that year, this year, become 100%, say in August, then you would apply and it would be prorated on as of August, whatever date they give you, like August 12th or something like that.
Okay. Sessions. Sessions. Yeah, we try to publicize as often as we can. So when you hear about them, or if you know of a location that will take our information, then please feel free to let us know. We try to do these, well, we used to do these sessions every month, but now we do them every other month. But because I know it's property tax protest season, then we do them a little bit more frequently. And I believe there's a calendar or a schedule that HCAT has also with all of the available dates that there are umpteen thousand, I'm exaggerating, but there are quite a few different sessions that they are having throughout the entire city at various locations. There's actually one going on right now. When we're doing this one virtually, they're doing another one in person somewhere else today at the same time. So there are multiple that are scheduled throughout the protest season.
There's actually one scheduled at our office next week on Tuesday, I believe, the 12th.
On the 12th at 10 a.m. Nope. Yep, at 10 a.m.
Mm-hmm.
On the Northwest Freeway, 13013 Northwest Freeway.
And that will be on the 6th floor of our building.
Yep, at 10 a.m. So I do have this calendar or like the workshop schedule, so I'll include that on the email that I send out to everybody too. So that'll be included there. It's only before I'm watching because someone told me everyone who owns a property with any exemptions are required to pay the reduction back if the owner passes. I knew that wasn't possibly correct. No, ma'am, that sir, sorry. I can't tell if it's male or female. That is not correct. You do not have to pay back exemptions. And I believe Shay went over that, or Sarah, whichever one, in the beginning. Deferrals are required. You know, it just kind of postpones the actual tax payment, but exemptions, you do not have to pay that back. We get that confusion, have gotten that confusion for years and years on end. And even the opposite way, where somebody thinking that they're applying for deferral and they apply for an exemption and they end up owing penalty or getting penalized because they thought they applied for a deferral when they actually applied for an exemption. So if you're not sure which one that you have, please contact the appraisal district's office to verify, or the tax office to verify if it's an exemption or a deferral for your property. So you don't want to make the mistake of doing that and then you end up getting the penalty. There was a question here about the condo. My condo building is proposing to repipe the building, the whole 1980 building, lowering our condo values substantially. So to see units, we would be taking a substantial loss on condos. Can you protest the current valuation?
Yes, you can put in a protest for that on your valuation.
Okay. All righty. I believe that is all that we have for this afternoon. Again, a copy of the recording. You all will have access to the chat so that you will see some of the questions that were asked and answered by the representatives from the appraisal district and the tax office. The recording will be sent out. The links to the various websites, to the different forms that were mentioned, all of those will be included. Our calendar for the remaining month of May, along with the workshop schedule for the tax office, will also be included. What else do we have that's coming up? For the month of May, I know next week we have our reverse mortgage pros and cons presentation that's going to be on Tuesday, the 12th. We are also hosting our two-part transfer on death deed clinic that's going to be scheduled for Wednesday, the 13th, out in the city gas community. Please come out if you guys need more information or need to talk with the attorneys about a transfer on death deed and what it is and the benefits of having one of those to help with protecting your property and transferring ownership to your heirs in the event of your passing. That flyer will be included following the first part of that session. Part two, we'll have a few attorneys that will be present, notary services, somebody to search property records for you and to help you with actually filling out a transfer on death deed and getting it potentially electronically filed for you at no charge. So please visit our website to register for that. Again, that is next Wednesday for our transfer on death deed clinic. That is free for everyone to attend. And if you income qualify, then we will pay for the filing fees for you to get that done for you as well. So with that being said, I thank y'all very much. Thank you for filling in for Ms. Mabel as well. Frank, you guys did a wonderful job. Thank you, Ms. Linda. We appreciate you, Ms. Kim, Shay, and it looks like Miss Anitra is online too with HCAD. Thank you very much. Appreciate you. Appreciate you all for taking the time out this afternoon. I hope you all got all the questions addressed and answered that it is that you have. I was trying to monitor the chat and review the questions at the same time that were sent to me in advance. If I skipped over somebody's question or forgot something, I do apologize in advance. But again, we do these sessions. Typically, it's the fourth Wednesday of every other month. However, we decided to move up this month's date due to the fact that the protest deadline was coming up for next week. So we wanted to make sure that we got in an extra session to get those questions addressed and answered for all of you guys. So thank you all for joining us, for returning to the A Month of Service collaboration. On behalf of all of our partners, we want to thank you for coming and invite you to join us for another presentation. So you all have a wonderful remainder of your afternoon. Take care of yourselves. You stay safe, and we will see y'all next time. Y'all enjoy the rest of your day.
Thank you, Nia.
Thank you.
Thank you, Nia.
Thank you. Thank you.
Thank you.